Once you've completed, you get this very nice email to say, congratulations, you have now completed on your purchase. You can pick up your keys. And then that is when you can go and pick up your keys, start your refurb if you need to do that. And then the property is yours. Hello everyone, welcome back to my channel. In today's video, I am going to be detailing out the step-by-step process of buying an investment property. Now, this is solely based on my own personal experience buying 2 investment properties here in the UK and nothing else. So please, I am not giving out any financial advice. Speak with professionals about your situation so that you can get the right advice for yourself. So let's get started. So the first thing you need to think about when you want to buy an investment property is to really think about if you want to buy the property in your personal name or in a limited company. Now, I chose to buy in a limited company for a couple of reasons. One is because I'm a high rate taxpayer and it was just more tax efficient for me to have the properties in a limited company rather than my personal name. Additionally, there's so many expenses that I can net off the income coming into the company as well before I work out my tax, so I'm able to pay less tax that way as well. Another thing is because I'm still renting, and it just means that, you know, if I buy these properties in a limited company, I still qualify as a first-time buyer whenever I'm ready to buy my residential home. So I think for me, those are some of the rationale behind why I chose to buy in a limited company. If you're like me and you're thinking about, you know, buying in a limited company, then you need to register the company. Usually people will register companies that they refer to as SPVs, so special purpose vehicles. Essentially, they're just limited companies with the sole purpose of buying and selling real estate. So when you're registering the company, you know, just select the right SIC code. So SIC codes are like unique identifiers that just lets anyone that see that code to know what the company is about. So for my company, the SIC code was 68100, if I remember correctly. And it just basically says that this company buys and sells its own real estate. That's all that is. So go ahead and register the company. One other thing you need to think about, especially if you want to have other people, you know, as shareholders in the company, is you really need to think about the ownership structure. Because for me, I'm a sole shareholder, sole director. So it was just me that the lender was concerned about. My understanding is that if you have shareholders that own more than 19% of your company, then the lender is also interested in those people's bank statement and credit history and all of that. So really think through about how the ownership structure should be. Who's the best person amongst all of the shareholders to own a larger share of the company in order to help you, you know, possibly, you know, get a mortgage. And you don't have a director that owns a large chunk of the company that is going to prevent you from being able to get a mortgage, because the ownership structure would have an impact on whether or not you're able to get a mortgage. Another thing that I need to mention is that there is no like length of period that this company should have existed before you'll be able to get a mortgage to buy an investment property on the company. You can legitimately register the company today and get a mortgage on the company today. And that's simply because, you know, the lender is more concerned about the potential rental income on the property when they're considering lending to you, rather than how long the company has existed or the turnover of the company and all of that. It's usually evaluated on the individual asset that you're trying to buy. The next thing you need to think about is how you want to finance the purchase of the property. Do you want to use cash or do you want to use a mortgage? Now, I use the mortgage. And I would advise that if you're using a mortgage, that you also get a mortgage broker. One other thing that you need to think about before you speak to a mortgage broker is what you're going to use the property for. So are you going to buy the property and rent it out to like a single family, or do you want to rent out the property room by room, or do you want to use the property as a holiday let, or do you want to flip the property? You really need to think about this. And the reason why this is important is because there are different types of mortgages that you will require for the different types of things that you want to do with the property. You may find one or two odd lenders that may allow you to use one type of lending to do other types of things. But these are information that, when you give to your mortgage broker to say, hey, this is what I want to do, then they can find the right product and the right lender for you. One thing to think about is with all these different options, is there might be different requirements. For example, I remember when I was considering one property that I was thinking, I'd use as a HMO. They told me that because I didn't have 12 months landlord history, then that I wouldn't be able to, get a HMO mortgage with certain lenders. So you really need to be sure what you need to do and speak to your mortgage broker about that so that they can really help you with a tailored, product and lending option for you. So that is very important. So when you're speaking with your mortgage broker and you've given them all of this information, they also want to know, like, your deposit, for example, where is it coming from? If you are using your personal money like I did, I used primarily, my savings from my salary. They needed to see one, proof of the savings, of the deposit, and more importantly, like the track record of how I saved it. For every money that entered the savings account, they wanted to know where they come from. So they see my salary come in, they see that money move to a savings account, so they're able to track that. I also had to provide my pay slips, copy of my ID as well, and then also my credit report. So your mortgage broker may ask you to download your credit report and send to them. So, you go on, I've forgotten the name of the website now, that you go to get your credit report. But I'm sure that if you Google it, you'll find it online where you can download your credit report and just send to your mortgage broker. They will also want to know potentially what the price of the property you might be looking at would be, and what the potential rental income on that property is. Like I mentioned earlier, getting a mortgage on an investment property is not because of your salary, it's because of the value of the asset and also the potential rental income that the property can generate. So if you have an idea of like the area that you want to buy and like an amount that you're thinking about, you can just go on Rightmove or Zoopla and check properties for rent in that area and see what properties in that area is like renting for. So basically, what the mortgage broker wants to do in the initial stage is to try and get you a mortgage approval in principle, which basically says that if all of this information is correct, then this is how much potentially they can lend to you. Another thing that your mortgage broker is also going to want to know is the residency status of the directors, shareholders of the company, depending on the ownership structure. So if you're on a visa, they want to know because, different lenders have different criteria as to, if they want to lend to someone on a visa. I did mention that, my first property, I was a first-time buyer, first-time landlord on a visa, trying to buy, an investment property in a limited company. And I had to go with a specialist lender. So you may not be able to go with a high street lender if you don't fit into a certain criteria. Like a lot of lenders like people that, own a residential home and then they are coming to, buy an investment property. I did the complete opposite. I bought 2 investment properties right now and I'm still renting. So you want to be transparent with all of this information so that they can, again, look for lenders who are open to people in your situation. Right. So once you have your mortgage approval in principle, remember it's just a guide, right? Then, get a solicitor as well. I would say just get quotes from different solicitors. It doesn't mean that the one you actually select is the one that you're going to go with eventually, but have an idea of how much, conveyancing would cost. Quick tip is if, you're based in London, for example, and you think that, you have to get solicitors in London. It's not true. You can get solicitors outside of London. What I found is that solicitors based outside of London, especially up north, are like much cheaper than solicitors based in London. So, you don't need to physically go to their office or meet with them. everything you want to do during the conveyancing process can be done remotely. I ended up using solicitors from Leeds for my second property, and the first one was a solicitor from London, and they were expensive. I will come back to another thing about maybe switching up your solicitor depending on the lender that you go with as well, because I did mention earlier that you may have to change your solicitor, so it's not a problem. The process of switching it out is like really easy. So once you have your mortgage approval in principle and you have potentially like solicitors that you can work with when you have your offer accepted, then you can start viewing. Now I have to say that for my first property, I did the complete opposite. I found a property first before I got a mortgage approval in principle. Again, my situation was like, hey, the specialist lender that my mortgage broker was presenting me to wanted me to present an actual property that an offer has been accepted on first before doing a mortgage approval in principle and then going for a full mortgage application. So once you go for the viewing, you like the property, put your offer in. When you're submitting an offer to the estate agent, you want to, to show seriousness because you might be competing with different people. You want to make sure that you have your proof of deposit in form of your bank statement, your ID, and possibly your mortgage approval in principle. Now, I didn't have mortgage approval in principle for my first purchase. So what I did was just to copy my mortgage broker in the email that I was sending to the estate agent to say, my mortgage broker is copied in this email and she's going to arrange the mortgage approval in principle and the mortgage offer, basically. So that was fine. Once you do that and the offer is accepted, the next thing you need to get from the estate agent is the memorandum of sale. Now, your mortgage broker is going to need this to do the full mortgage application for you. So your memorandum of sale just basically details information about all the parties involved. So who's the seller, the name, who's the buyer, your company name or your personal name, and the estate agent's information. That's usually what is there, and the agreed amount as well. So you send that off to your mortgage broker once you have it from the estate agent, and then they can then do a full mortgage application for you. Now, once this is done, during the application process, the lender is likely going to, go and do evaluation of the property. So they would send someone over to the property or do a desktop valuation. So usually when they do like a desktop valuation, my understanding is that they just check comparable properties around to see, if the property is worth what, around what you have offered. What you need to think about is if they think that you have offered way more than the value of the property, they will consider that when giving you a mortgage offer. If they're meant to give you 75% of the value of the property and you offered £150,000 on the property, and they think that the property is worth £100,000, they will only offer you £75,000 and you have to cough out the remaining £75,000. So before you offer on a property, you too want to check comparables around the area, like, in this area, properties that are like this, the same, maybe around the same size, around the same number of rooms, the same kind of like standard condition. Are they, selling around the same price, or have they sold around the same price? So that's just like a tip for you. Anyways, so once the bank, gives you a thumbs up and you have the full mortgage offer, I forgot to mention something. You also have to send your solicitor's details to your estate agent when you have the offer accepted. Now, that's because they also send a copy of the memorandum of sale to your solicitors. Now, when you do this, my advice is do not pay your solicitor or instruct them to start the search process until you have the full mortgage offer from the lender. Don't pay or instruct them to go and start to work, because if you pay them and then the bank goes and there's something wrong with the property and then you're not going with it again, that money, I can tell you, it's not going to come back to you. I had the same situation when I worked with a property sourcer and I was a complete newbie, and she made me make all of these payments and I ended up losing the money. So wait and make sure that you have your mortgage offer. It really doesn't take time. Sometimes it may take just a few days, sometimes it may be a few weeks. But wait till you get the full mortgage offer before you instruct your solicitors to now go and search on the property. So once you instruct your solicitor, you're going to have to pay a small fee as part of their fee. And they would then, send you a list of forms for you to fill. Basically also detailing like where is your money coming from, your deposit primarily. They're going to do anti-money laundering checks for you. And if you're using your personal money, for example, and it's the company that is buying, right? They want to know what is that money to the company. So in my case, I said that the deposit that I'm giving to the company is a loan from me as a director. So it's a director's loan. So because of that, they requested for a director's loan agreement between myself and my company. Remember that, you're a separate entity from your company. So Jadesola is different from, her company. So that's how the solicitors are going to be looking at you as an individual and also the company. So I had to do a director's loan agreement, and then you state whether or not you're charging the company interest, when the company is supposed to pay you back. I did the agreement myself. Your solicitor can help you draft the agreement, and then you can then just sign it. And then you would also have to do like a board resolution from the company to say, hey, they agree to borrow this money from you as a director, and they're authorizing that loan as well. So these are things that you can do yourself. You can find templates online. You can use AI to guide you to come up with these things. One thing with my first director's loan agreement was that the bank requested that I add an extra clause to the agreement. So let's say that in my director's loan agreement, I had set out that the company would borrow the money from me for like 35 years and my mortgage is 30 years. It's implied that, I would have paid the bank before, the company would have to pay me back. However, the bank wanted that clause spelled out to say that the company would not pay me back until they have been paid. So I only just needed to add that clause to it, and that was fine. And it was the same template that I used for the second property as well. Another thing that I need to mention is that you're going to personally guarantee the repayment on the mortgage as a director of the company. So you will need to fill out a personal guarantee form that basically says if the company cannot pay, you're liable to pay. And you will require an independent legal advisor to also, because you can't use the same solicitor as the one for your company, and you will have to pay for that. So for my first purchase, the solicitor that I was using for the purchase got me an individual within their firm that I worked with personally, and basically they will just read out some clauses from the mortgage offer to you to make sure that you understand the implication of what you're signing, that not only is your company liable, you as an individual, you're also liable if the company is not able to pay. Another thing is when I mentioned about changing solicitors midway is because I worked with specialist lenders actually for both purchases. They work with specific, solicitors. So the original one that I wanted to use that I got quote from was not on the panel of the specialist lender that I was going to use. So they gave me like a list of the law firms that they work with, and then I selected and reached out to, some of them, and then ended up going with the one that I felt comfortable with. So that's something to think about. And all you have to do if you have to switch is email the estate agent again and tell them that you're changing your solicitors because of XYZ, and they need to reproduce the memorandum of sale and send to your new solicitor now. So you put the details of your new solicitor there. It's basically the name of the law firm, the contact person, email address and phone number, and that's it. So once the conveyancing process starts and you instruct your solicitors to start the search, they will basically check, the title will check that the boundary of the house is what it is. They will send the document to you to check as well that, hey, is this the house? Is this the location? Does this, correspond with what you think it's supposed to be? They do environmental search as well to make sure that, hey, if there's been any report with the area, let's say flood risk or whatever, they will do search as well. So they do all of that. Then they ask questions back and forth with the seller solicitors. They want to know what are the fixtures and fittings that are going to be sold with the house. So sometimes when you go and view and then the house is fully furnished, it doesn't mean that when you buy the house, you're going to buy the house furnished. So they will detail, a list of everything that is going to be sold with the house, and you have to check it and make sure that, you're fine with everything. And it's not like you're assuming that you're going to have the fridge and the freezer in the house, and then that's not the case. You, on the other side, I will advise that you need to get a survey done. Like the survey is going to help you to identify potential issues that may be in the property that you've chosen. So even though the lender is going to send someone to go and do valuation in the property, they're not going to do like a detailed survey. And there are levels to this survey as well. There's the light one, there's the more detailed one. There are people that would go with a drone or like a ladder into the roof. So it depends on what you want to pay for, right? So, but get a survey done. At least, even if you're still going to go ahead and buy a property with issues, you're aware of the issues, with what you're buying. Another thing that you're able to do is use the outcome of the survey to further negotiate the price down. So with my first property, for example, I was able to knock off additional £4,000 from my initial offer based on the outcome of the survey. Right, the survey had identified some issues which, the surveyors will color code into like red, amber, green. So red is like, hey, this might be a serious issue that you need to check out. Amber might be, it might just be like an issue with the house because of the age of the property. Green is like everything is good. And there are times that they would identify issues and would say that you need a specialist to go into the house and check for you. So you do that while the conveyancing is ongoing. Sometimes you may want to do it before the conveyancing even starts, because you're still going to pay your solicitors once they start, to do their work anyways. Once your solicitor is done with their own search and everything they need to do, they will send you a bunch of documents that you need to sign. Some of the documents might require you to get like a witness to sign alongside you, so someone that is not a family member. Now, one of the forms that your solicitor is going to send to you as part of the conveyancing process is a form around the stamp duty. And you will pay stamp duty regardless of whether you're a first time, second time, whatever investment property buyer. The only time you're exempt is if, the property you're buying is uninhabitable at the time of purchase. So let's say it's completely run down, you may be able to have a stamp duty exemption. Or let's say it doesn't have like a basic amenity, like let's say there's no toilet in the house or there's no kitchen in the house and no one can really live in the house, right? As long as you have proof, then you may be exempt from paying stamp duty or even getting a refund if you've already paid stamp duty. But again, speak with your solicitors about this if you're able to, be exempted. However, you will pay 3% stamp duty, depending on the purchase price, or 5%, again, depending on the purchase price. For the properties that I bought, I paid 3%. So once you sign all of the documents, the solicitors would have like a checklist of everything that the lender wants in place before they can issue the money. One of those things would be landlord's insurance. And you have to pay for that insurance. Basically, the insurance covers things around fire and burglary. You can choose to add things like rent guarantee to the insurance. So basically, if you let out the house and your tenant is not paying, then insurance company is going to pay the rent while the customer is, while the tenant is owing you. Another thing you can add to it is legal fees. They can cover your legal fees if you have to take the tenant to court as well. So you do your insurance, and if they request for it, you can present it, but make sure that you have the policy in place. So once everything checks out, the solicitor will then ask you for like your, desired exchange date and completion date. So at exchange is like point of no return. Once you exchange, you can go back and say you're not buying again. So be sure, because on that day as well, you're going to be parting with a portion of your deposit or all of your deposits, depending on whether or not you're exchanging and completing on the same day. And And your completion day is basically also the day that the bank is ready to transfer their own portion to your solicitor. So for the first one, the exchange day and the completion day were not the same day. So I paid 10% deposit when we exchanged contract, and then 3 days after, when we completed, I transferred my remaining deposit and stamp duty, as well as the balance of the solicitor's fees to them. For the second one, exchange and completion was on the same day, so I transferred all of the money at once. So you're not paying the seller directly. Everything goes through your solicitor. So your deposit goes to your solicitor. The bank also sends their own portion to your solicitor. And then your solicitor pays the seller solicitors. If the seller has a mortgage on the property, their solicitor will make sure that the lender is fully paid, and then they transfer whatever outstanding to the seller after they have also taken their commission. And once you've completed, you get this very nice email to say, congratulations, you have now completed on your purchase. You can pick up your keys. And then that is when you can go and pick up your keys, start your refurb if you need to do that. And then the property is yours. Between like a week to a month, depending, your solicitors will then register the title of the property in your name or in your company name, and then they will send you a proof as well. And that is the entire process. I know this is a very long video, but I've just decided to answer a lot of the questions that I was getting in the comment section via video, as opposed to replying to every single question in the comment section. Anyways, if you've enjoyed this video, please make sure you like, subscribe, and share. And I will see you in the next video. Bye.